that's why I hate to think that we're going to be that schizophrenic, but I think that's what we're seeing. And part of the thing that comes into it now is I think we're so driven by FOMO, fear of missing out, particularly among institutional investors who have to be invested, who see these gaudy year-to-date numbers, and you don't want to be the guy not invested. And so I think that's a lot of what we're seeing is just, this fear of being the guy left on the sidelines. If you look back and say, well, the market's actually down over the last 6 months, but if you look at it year to date, and that's how a lot of these guys are getting measured, if you're not up something close to double digits, your job's at risk. So you got to be in there.
Do you think that a lot of guys on the institutional side missed this? Do you think that there was a lot of selling into December and the guys were under positioned? Like, obviously there must have been a fair amount of that, but what extent do you think that are people still underinvested and waiting to get in, waiting for the decline to buy? Like, how many guys are sweating it out right now saying, geez, I hope we get kind of a 3% or 5% dip so I can buy it?
I think that there's fewer and fewer each day. I think now what you're also starting to get are, the people who don't necessarily have to be invested, with their FOMO, because, you just, the anecdote of like my wife's friend telling her about like her great broker and how she's getting back in the market because it's zooming, and it's like, really now? Where were you all along?
No shit. Like that's, the timing on that is just not. It's amazing. It's the reaction function, right? On the way down, no one wants to touch it with a 10-foot pole, show a 10% return in 1 month, and everyone needs to buy because they fear of missing out. It's amazing the behavioral element of the markets, isn't it?
Absolutely. Well, my comment is, if you're an institutional investor and you have fear of missing out, I kind of get it. It's just, it's fear of like losing your job or getting a crappy bonus or whatever. But if you don't have to be invested, and the only reason that the best reason that you have for being invested is just the fact that you're watching this thing go up, that's not FOMO, that's just envy. And it's just, you really have to understand you really have to understand your emotional makeup if that's the case. And that's what puts us right now at what I see as a crossroads. Excuse me.
Yeah, one of the interesting narratives that I've heard a number of these quant guys talking about is this idea that a lot of these traders that were forced out of the market are not actually buying aggressively the market through buying of equities, but they're using derivatives as rentals to participate on the upside, particularly using a large amount of options to get that exposure to the upside. And that makes me think that while there's this chasing the markets, not everyone's convinced that this is the real deal. And I wonder whether or not what is the implication of that on the other side once this kind of peters out and runs momentum. Now you have this chart here that you wanted to of the S&P 500. Why don't you tell us what's on your mind on that and how you see this kind of playing out this way?
Well, I mean, to me, what this is saying is, okay, so we had what really was a broader trading range, and the market was well supported at 2,600 and sort of ran into resistance, originally at 2,900, but then bounced off of 2,800, let's say, in the fourth quarter a couple different times. And then we broke that 2,600 support. All hell broke loose. The guys couldn't buy the G.I. Joes with the Kung Fu grip for their kids at Christmas time. And, I'll leave that to Eddie Murphy. He does it better than me. But that's...
They're thinking, hey, we're losing all our damn money, and Christmas is around the corner, and I ain't gonna have no money to buy my son the G.I. Joe with the Kung Fu grip, okay? And my wife ain't gonna make love to me because I ain't got no money, right? So they're sitting there and they panicking, they screaming, sell, sell! Because they don't want to lose all their money, right? They out there panicking right now. I can feel it.
To me, that is still the best explanation for year-end market dynamics. I used that multiple times because to me that was the best explanation of what happened in December was just, people running for the exits because, you didn't want to be the one schmo holding stocks. But now you're really at the crossroads again. We're at 2,800, and yes, they managed to shove the thing up above 2,800 today. I think there's some seasonality to it. First of the month, is there really money flowing in? They always say there is. So I'll give them the benefit of the doubt and say there was money flowing in. But, if the reason for the rally was really just, that a set of China numbers that were crappy yesterday all of a sudden look good today, which were exactly the same numbers. They just seem they're by different sources. So I don't trust anything really. That was more just, it's the first of the month. We're in a market that's rising. Let's go for it. But what you're starting to see is some of the moving averages start to roll over a little bit. On this chart, I included a bunch, and I included the MACD on the bottom. And you can see the shorter term MACDs, the 1020, have started to roll over a little bit. The longer term MACDs, 2155, which I kind of like. It's a weird set of numbers, but seems to work for me. Those are not quite crossed over, but they're close. The 200-day moving average is rock solid. That's actually probably, barring a big rally, that's going to start to decline because you're going to take out lower numbers and you're going to take out higher numbers, put in lower numbers. That's going to take a while, but you're starting to see the 100-day moving average reflect that. That's the red line. And so that's why this is a very tricky time. And going back to what we're saying with vol is, it's tough to make a case one way or the other. Let's go long or short. I think from a technical point of view, from a movement point of view, gosh, we've come a long way in a short period of time. And I'm less thrilled that when every time, various market commentators have said, well, we're off to our best start since 1987. Well, guess what? That's when I started trading, and that did not have a pleasant end to it.
I know, that's hilarious, isn't it? When they start mentioning 1987 and they think this is a good thing. I'm like, Jesus Christ! Like, don't you realize that what happened later?
Do you have no historical context whatsoever? Best start since 1929.
So Steve, what I was just going to show is like last week's show. I went back to 2016 because when we look at market breadth indicators, the last time we saw the market so overbought in a short period of time was the Jamie Dimon bottom in 2016 that saw that big, huge rally that ensued. And I always like to highlight what happened in the next 2 months. Nothing.
Oh, yeah.
Right, like it just traded sideways, and I'm just curious as to whether or not you subscribe to that view. Do you think that there's that this is just going to muddle here, like neither sell off nor rally, or is there another big move coming in the next month or two?
Steve, you're welcome to tell Patrick he's full of shit.
Well, you know what? I would if I disagreed with him, but this is the second time we're generally in agreement, and I actually think
great minds think alike. By the way, right?
Is consolidate. Sorry.
Great minds think alike.
But fools seldom differ.
Absolutely. No. So what I'm thinking now is, let's put it this way: if it would be much healthier if we did consolidate and move sideways for a while. If we don't, I think that just makes it that much scarier because, look at the moves we've had, and I think markets are not healthy when they go in one direction. You need to consolidate. I'll use the old trees don't grow to the sky, whatever. But I can come up with plenty of those. But you need to move sideways periodically just to consolidate these super sharp moves that we've had.